On June 12, 2026, SpaceX bypassed the traditional Wall Street roadshow and set a fixed price of $135 a share. The result was the largest initial public offering in human history. This chart compares the size of that raise to the previous record holders. The $75 billion SpaceX held in is more than double the $29.4 billion raised by Saudi Aramco and 3.5 times Alibaba's 2014 debut. The offering valued the company at an astonishing $1.77 trillion, and because Elon Musk retained about 42% of the company's equity, that valuation had an immediate side effect. By the time the opening bell rang, the value of his personal stake pushed his total net worth past the $1 trillion mark. To put $1 trillion in perspective, that fortune eclipses the GDP of entire modern nations like Switzerland, Ireland, and Sweden. It even dwarfs the inflation-adjusted peak wealth of America's first billionaire, John D. Rockefeller. On June 12th, the market redrew the historical ceiling of individual human wealth in a single trading session. But if you look at the actual accounting, a glaring contradiction emerges. The conglomerate commanding this nearly $2 trillion valuation lost $4.9 billion in 2025. This scatterplot illustrates just how expensive that is. Investors are paying roughly 94 times trailing sales for a money-losing company. That puts its premium far above the most famously expensive tech stocks on the market, like Nvidia at 23 times sales or Palantir at 67. To actually justify that $1.77 trillion entry price mathematically, the company's revenue would need to grow by 50% every single year for the next decade. That requires a final year sales jump no corporation has ever achieved. Buyers are completely ignoring the traditional balance sheet. Instead, they are paying the highest narrative premium in stock market history, betting entirely on a highly speculative story of the future. The functional engine keeping the lights on right now is Starlink. The satellite internet service brought in $11.4 billion in 2025 and recently crossed 10 million subscribers. This graph reveals a hidden drag on that growth. While the subscriber count is rising sharply, the average revenue per user has steadily declined for 3 consecutive years as Starlink cuts prices to enter cheaper overseas markets. And while the workhorse Falcon 9 rocket dominates the global launch market, the massive Starship program remains commercially unproven. It flew only 5 times in 2025, falling far short of its 25-flight target, while losing $500 million in hardware. The real financial weight dragging down the ledger, however, is the recently absorbed artificial intelligence arm, xAI. That segment alone bled $6.36 billion last year. Musk is selling a strategy of orbital data centers, positioning SpaceX as a vertically integrated AI monopoly that operates entirely above the Earth's atmosphere. That $1.77 trillion price tag doesn't reflect the reality of today's satellite internet economics. It relies entirely on investors projecting the success of AI infrastructure that doesn't currently exist. The astronomical valuation was also driven by the sheer mechanics of the IPO itself. Management skipped the usual Wall Street book-building process, telling investors the price was exactly $135. Take it or leave it. This chart shows how they squeezed the market. SpaceX kept 95.7% of equity locked up, releasing a tiny 4.3% float. Forcing over $250 billion in demand into that tiny sliver creates a massive supply and demand imbalance. Then, major indexes like MSCI and NASDAQ bent their own rules to include the stock almost immediately. That mandated passive index funds to indiscriminately buy up an estimated $30 billion in shares, regardless of the underlying price. The day one market cap was effectively engineered by structural scarcity and hype, shielding the stock entirely from true fundamental price discovery. This gauge compares the massive schism among Wall Street analysts right now. On the conservative side, Morningstar pegs the stock's actual fair value at just $63. On the other extreme, ARK Invest projects a $2.5 trillion valuation by 2030. ARK's Cathie Wood has been the primary proponent driving those high estimates, arguing that orbital data centers could multiply the company's revenue 10 to 20 times higher than current models assume. Outside the financial sector, the creation of a paper trillionaire triggered an immediate, intense political outcry in Washington. Lawmakers like Bernie Sanders and Elizabeth Warren immediately cited the milestone to demand aggressive new wealth and AI taxes to combat the rapid concentration of resources at the top. The public reception of this new wealth is also heavily complicated by Musk's polarizing stint leading the Department of Government Efficiency, where watchdogs flagged his oversight of agencies that hold billions in SpaceX contracts. The SpaceX IPO stands as the ultimate test of market gravity and the defining lightning rod for a new speculative Gilded Age.